Foreign central banks have been incentivized to buy gold because the dollar has been weaponized. That doesn't mean the foreign central banks will put all their reserves into gold, but gold is one of the beneficiaries of that trend. On the diversification side, you mentioned AI. AI is a huge trend. I said we may be in the late 90s, but there are people who are concerned about valuations. And where do you hide? Gold is one of the places. I'm not saying that that is necessarily where everybody should go, but it's one of the reasons why people go.
After surpassing the $2,000 per ounce threshold at the start of 2024, gold prices have continued to hit new record highs, briefly exceeding $2,700. Gold prices remain robust in the first week of 2025, above $2,600 per ounce. According to a CNBC report, analysts from JPMorgan have forecasted that gold prices will likely continue their upward trajectory, potentially reaching $3,000 per ounce in 2025, especially if U.S. economic policies become more disruptive for the market. The World Gold Council has also projected a moderate yet positive growth outlook for gold prices in 2025. Axel Merk, president and CIO of Merk Investments, explores why gold is increasingly regarded as the ultimate refuge for investors during uncertain times. Merk has publicly acknowledged his significant investment in gold, including recent filings revealing his gold miners' investments. He highlights that rising interest rates and expanding deficits are crucial in driving interest in gold as a safe haven asset. The global gold market experienced its best performance over a decade last year. According to reported data, November saw another strong month for gold buying, with central banks collectively adding 53 tons to official global reserves. The National Bank of Poland, NBP, was the largest purchaser, increasing its gold reserves by 21 tons, bringing its total to 448. Meanwhile, the Reserve Bank of India continued its 2024 purchasing trend, adding another 8 tons to its gold reserves in November. Merk points out that foreign central banks have been encouraged to buy gold due to the weaponization of the dollar. While AI is a significant force, many investors are questioning where to secure their assets, and Merk highlights that gold is increasingly viewed as a potential safe haven. Let's jump into the video for more details. If you like what you see, please thumbs up and subscribe to our channel to stay updated with our latest content.
The record of having significant investment in gold, I've made some public filings of investing in gold miners recently, and so I might be biased, so I'll put that there with a little caveat here. Historically, the sort of gold investors you have the folks who are concerned about the purchasing power of the dollar. You have people concerned about valuations and want to diversify. You have the speculators. You have the central banks. And then, of course, if you're in an environment where the economy were to have a very negative outlook, and so if you go through these different sort of key metrics here, foreign central banks have been incentivized to buy gold because the dollar has been weaponized. That doesn't mean the foreign central banks will put all their reserves into gold, but gold is one of the beneficiaries of that trend. On the diversification side, you mentioned AI. AI is a huge trend. I said we may be in the late 90s, but there are people who are concerned about valuations. And where do you hide? Gold is one of the places. I'm not saying that that is necessarily where everybody should go, but it's one of the reasons why people go there. And I think one of the bigger ones is on the fiscal side. If we have higher rates, you mentioned the interest to finance the deficits, that's only going to get worse. I mean, we're in peacetime somewhat, and I say somewhat because I think that what's happening in the Middle East and Ukraine are just symptoms of a new era, but that doesn't bode well for the purchasing power if we can't get our fiscal house in order when times are reasonably okay. And so, yeah, investors in gold do that. Now, does that mean we can't have a correction? Of course we can have a correction, even a significant one. But it's kind of one of the reasons why investors in gold are coming to the table. And then lastly, the speculators, those folks have been mostly absent. They've gone more of the meme stocks. But if we have a significant run up or run down in gold, I wouldn't be surprised if those speculators come back to amplify volatility mostly. Investors think they're special. And I'll get many gold bugs upset here because I don't agree with that manipulation thesis. every freaking market is quote unquote manipulated. It is not just the gold market. And with manipulated, I mean the sort of things that people allege. The moment you have derivative markets, and any mature market kind of has that, you have people that hedge, you have people that try to do arbitrage, you have people that have all kinds of motivations. That's what makes a market. And does that mean you'll have some distortions versus if you only had a spot market and no leverage? It's just like with Fed policy. We can complain about it, but ultimately we have to deal with it. And so those quote unquote manipulations are not going to go away, and they're present in any market. I think what's relevant is that investors understand what's happening out there and take appropriate precautions. And so the kind of one of them is right, a few years ago we had negative oil prices. It's the sort of thing, if you read the small print, then you know what might be happening, and you can prepare for it.
In 2025, U.S. economic growth is projected to slow compared to the previous year, with a potential weakening of the labor market. However, inflationary relief may remain limited, potentially exacerbating inflationary pressures. The U.S. Federal Reserve will face the challenge of balancing economic growth stabilization with inflation control. Meanwhile, the country's federal debt issues may be increasingly challenging to address, with fiscal deficits likely to continue rising. Central bank gold purchases are expected to maintain momentum as global markets show potential for expanding gold reserves. Regarding the global outlook, Merk anticipates ongoing disruptions, including political changes and the growing influence of populism, which could have significant implications for financial markets. Given these potential challenges, Merk remains confident in his gold and gold mining investments, viewing them as a safeguard against market volatility. Now let's redirect our attention to a video.
If you look at in the US, there's something called Form 4 for insider buying. I've been an insider buyer in the mining space. It really depends on the type of investor one is, right? Gold has a volatility about similar to that of the equities market, the S&P, but can go up. The gold mining sector has a much higher volatility. We focus more on the development space, where we try to capture value as these companies go up in the value chain. Bigger investors come in, they get added to indices and whatnot. We think that there's a lot of value there. But kid you not, it is a very, very volatile space, and it is not for everybody. Now, on the good news side is you need less of an allocation to that space to get more bang for the buck. But it is not for the faint of heart to invest in that space. Right? We've had an extended bull market. What people tend not to do is they tend not to take chips off the table as the bull market goes on, which means that on the way down, they lose more than they should, and they panic. The way you avoid the panic is by following the investment process, whatever that may be. A mediocre process is better than no process at all. And if you have a process. And the other thing to keep in mind, as I alluded to, is that what drives the market tends to be not what people predicted at the end of the previous year. And that's because the world is changing. There's a war somewhere. There's a scandal somewhere. There is something happening. I think it's pretty clear that the is kind of ebbing out, and we continue to have the rise of populism. I alluded to the German election, so there will be disruption, and it's not going to be the end of the world. There's always going to be the next day, but you may want to think about what you do in your personal life to prepare for that, and notably also in your investments. In Europe, unfortunately, things are so rigid that people want to break things, and indeed, that may well mean breaking some of the bigger stuff, such as the euro at some point. I don't think that's going to happen this year, but that risk is obviously increasing as you have more of these populist parties going up. It's because if the governments can't have proper reform, at some point somebody else is going to do it more forcefully. And Trump, in some ways, is going to be an anchor of stability. And if that doesn't shock you, then you haven't paid attention, right? Because we kind of know how Trump operates. We don't know what's going to happen in some of the other places in the world. And in circling back, right, in that context, I'm quite okay with the sort of gold and gold mining allocations that I have as some of these disruptions might come.
In 2025, the global gold market is poised to thrive amid ongoing economic difficulties and escalating geopolitical tensions, with central banks steadily increasing their gold reserves due to concerns over the weaponization of the dollar and inflationary pressures. The U.S. economy is expected to slow, with a weaker labor market and persistent inflationary risks, putting the Federal Reserve in a challenging position as it attempts to balance growth stabilization with inflation control. Meanwhile, the U.S. federal debt issue is likely to deepen, complicating fiscal management. Despite these obstacles, gold continues to be a safe haven asset, with central bank demand potentially driving further growth in gold prices. How should investors adjust their strategies to protect their portfolios? Join the conversation. Share your thoughts in the comments, give us a thumbs up if you found value in this video, and subscribe to stay engaged with our community.